Shift focus to markets once again. Now, one of the stocks which has been in focus is Signature Global, which is up in trade around 2%. Let's connect with the management to discuss what is the guidance which management wants to give. And Rajat Kathuria, CEO of Signature Global, is joining for the same. Mr. Katoria, welcome. First of all, I want to understand from you the quarter gone by. We have seen, at least in the first half, the sales have declined. What the collections have also been declining on H1 FY26 YOY basis. So tell us why there is a decline in the quarter and also in the first half of the current financial year. And now for the remaining year, what is your guidance? Do you think there is a pickup in H2?
Yeah, thanks for inviting us to your show. So, see, we fundamentally maintain that this is a supply constrained sector. The way Gurgaon has progressed over the last decade, where a lot of physical and social infrastructure in the city has grown, the housing supply has not really happened in line with the growth in the city, and hence the sector remains hugely supply starved. As far as our supply pipeline is concerned, we've been doing sustained supply of newer projects in the mid-income market. Usually, these products range anywhere between 2 to 4 crore rupees, and they are in prominent markets. There are 2 or 3 very important markets where we've been doing supply of units on a sustained basis. So, if you do a comparison between supply in this year vis-a-vis the previous year, a lot of our supply in the previous year happened in the first half, whereas for the current year, a lot of our supply is getting planned for the second half of the year. And hence, a lot of these parameters, if you'll see it on a quarter-on-quarter basis or on a half-yearly basis, they will not give the right picture. But if I have to talk about the supply and rest of the guidance for the current year, in the first half, we launched about 2.5 million square foot of new products, which has a GDV of close to 4,000 odd crores. Whereas if you look at the second half of the year, the supply getting planned, or is it at very advanced stages of launches, is almost close to 8 million square foot. It would be somewhere between 7.5, 8 million square foot, and having a value potential of close to 14,000 crores. So clearly, bulk of our launches are happening in the second half, and hence the same are expected to drive up pre-sales and collection numbers for the second half of the year.
All right. So are you very confident then that you will be able to achieve your full FY26 guidance basis your commentary that you've given, and also because you have a lot of launches lined up in the second half of the year?
Yeah, we are quite confident that we'll be in the range in which we've given the guidance at the start of the year.
Right. Let's talk about the numbers. You had given a pre-sales target of 12,500 crore in FY26, and the company has achieved around 4,700 crore. What gives you confidence that the remaining part will be achieved in the financial year?
So see, we are coming up with 2 large launches. One is in a matter of couple of weeks, we are launching almost close to 3.6 million square foot. This is just off Dwarka Expressway, and we've tried to come up with the right ticket size at which we are quite confident that there's a good volume of end users who will get attracted towards the project. And followed up with that, we are coming up with almost 4 million plus, almost an inventory equivalent to 8,000 crores is getting launched on the Southern Peripheral Road. So put together, the launch value of both of these projects comes closer to about 13 to 14,000 odd crores, and hence we are assuming that part of percentage of these projects will get sold. This is the feedback we are also getting from the market, and once that happens, it takes us closer to our annual guidance.
So that's as far as your annual guidance is concerned, and you're telling us that you're very confident when it comes to meeting that. But part of it will flow in H2 of FY26, and the other part will be in FY27. So then what will your guidance be for fiscal 27 with the kind of launches that you have, and other launches other than the ones which are planned in the second half of this year?
See, the couple of bigger strides we have to take between now and the end of the year. So I'll prefer to not comment on the next year. But yeah, fundamentally, even we've maintained that to achieve close to about a 15 to 20%, growth in terms of sales is something which we endeavor for over a longer span of time.
Right. And what is the situation you are assessing on ground in terms of demand and pricing?
So, see, price rise has moderated. There was a period where prices spiked quite a lot. That was because there was a huge vacuum between the demand and the supply side factors. So, if you talk of calendar years 23 or 24, there was like a huge spike in prices which took place. But I think price rise has moderated, which we feel is a good scenario for the end users to assess, various products and enter the, market in a very established sense. So price rise has moderated, but supply side issues remain in the market, and hence, the demand continues to be strong.
Right, so that's your view when it comes to demand trends, and we'll perhaps touch base with you yet again at the end of the year to understand what your outlook is for FY27. Thank you so much for taking your time
Thank you
out
so
and
much.
joining us here today. That's all the time we have on this edition of the show. Thanks so much for tuning in, but Commodity Central is coming up next. Don't go anywhere.